What's up? What's up? Man, seem to be doing more Secretwars podcast episodes, Stan Weinstein revisited, and then my usual classic trading framework. But I've seemed to be to have married both using my monthly candle chart trading framework on the higher prevailing trend. As Stan always says, make sure in harmony. And I use the Stan Weinstein stage analysis on the weekly. And I seem combining both together. I confirmed the win direction, and then on the weekly, I confirmed that my sales are up and ready to accept that win to go in a nice stage 2. So here we are with CNE, Toronto Stock Exchange, and that is Canacol Energy Limited, Ltd. And another energy sector stock. I don't get if you guys, some people don't... Some people say they're mostly cash right now, or is it because they don't want to play stage 4s on banks, Canadian banks, or they're just... You don't have to be cash right now. If you see there's a stage 2 breakouts, energy, gold imminent. Don't jump the gun yet, but it's working its nice base. And not because NASDAQ stocks are starting to enter stage 3, or tech stocks or communication stocks are in stage 3 and 4s, and banks are in stage 4s, and other... It doesn't matter, right? If the stock market, if the NASDAQ is plunging, but the TSX is rising because of energy stocks, just play breakouts, play stage 2s, entries, breakouts, and stage 4 breakdowns, and the rest is pretty much noise. All right, let's set my monthly candle breakout levels. First thing, try to center the action if you can. Give yourself some margin. This is a technique I use in my emotion management. Is if you put the price action in the middle and create some black space, your subconscious, your brain's not going to try to be biased and say, oh, it could only go up, could only go down. So create that black space, and don't hesitate to zoom out, zoom in to make sure you have to identify as precisely as possible those support lines, those resistance lines. And see here, the lines are drawn. I do have a intermediate. Let's make that line straight. Intermediate support here. Let's try another one here. There we go. Patterns within bigger patterns. Each one giving a target. And after that, when that target is reached, or if that target makes a price action more closer to the breakout line of a bigger pattern, and after that pattern becomes a further away pattern, less probable possible target, etc. So the bigger the pattern, the further away the target is, the least probable you are of reaching it. It's okay, but you build. That's what a stage 2 stand does, and even in classical charting, there's always there's a breakout from a big base, big pattern, far away target. And along the way, you might have some consolidation, some sideways move, and that creates pennants or rectangles. And then if the price action breaks out above and that in your direction, you call that continuation patterns. So it's all good. Just recognize there's big bases, further away targets, more time to reach them than the closer targets, which have targets on the way to the further away targets. So I'm going to just draw my lines like that. And I know that on the monthly, I need a close above 460. So any candles right here above 460, it's a definite breakout. And that is the wind. There you go. Here would have been my target. That is the wind in my sales that I want for my weekly. And that's the harmony I want to be with. So let's zoom in back on the 5-year weekly. I have my super duper ADX that I use for where I want to use as a screener eventually. Guys, all these, my past few podcasts, I've gotten all these tickers from the US stock picks screeners from stageanalysis.net. Every night I'm there, I say, okay, try to find a stock somewhere in stage 1, about to go in maybe in stage 2 or stage 3, breaking down stage 4. And I try out a few of my tickers, or I go to alerts that were triggered during the week. Not quite what I'm looking for, but every time I go back to the picks on stageanalysis.net, I get pretty good screeners. So I'm not quite sure what algorithm he uses to screen. I think it's on stock charts, but whatever criteria he programmed in there, it's gives some good results. So bye ADX. ADX is the philosophy is if you're under 20, you're in a stage 1 or 3 consolidation, no trending, and when it goes above, the price action starting to trend, like here, to above 20, price action starts to trend up. Let's remove that. Stan did not use that. He did not use the RSI. He used the Mansfield indicator, which is the strength of the stock versus the index it's in. And which you want to see? I'm using the RSI, so it's not the official triple confirmation that Stan talks about in his book, but it's my confirmation for that missing indicator I have. And what I like is seeing the price, the RSI going over the halfway point, going to the direction I want. And right now we're smack in the middle, no man's land. What else do I see here? Crystal ball. Sorry. All right. Let's zoom it up. See, wow, look at that. Just back here, you had nice stage 2, man. That's beautiful. Nice stage 3. Price action starting to slow down. And timber. Stage 4. Far away from the 30-week moving average. Just awesome. Never get triggered out. If you're investors and you had your sell stops move along on the pullbacks, you would have never got triggered out. You would have taken your profits on the 1, 2, 3, and you would have taken your profits like on the trend line violation down here. It's crazy. What a nice, that's a beautiful stage 4 that fits very well in Stan's framework. After that, you have another stage 1 consolidation. And look at that breakout candle right here. See that volume? And after that, it went up a little bit. Nice stage 2 going up. Not as aggressive as the one before. And now that's where we're in here. So this is stage 3. But as time moves on, stage 3 could continue into a stage 2. Or it could break down in a stage 4. All right. So now I have the Ichimoku cloud. Remember, when the price action is above, you're in an uptrend. When you're below the red cloud, you're in a downtrend. You could also see the same thing with 30-week moving average. And you see that sideways move. That's another sign, a clue that you're in a stage 1 or 3. Is the Ichimoku cloud has gotten very thin. Price action getting tighter and tighter. And right now we're above the green cloud. We're above the red cloud. This is, if If it breaks out, we have no resistance on top. And that's what it looks like. What I'm going to look for also is volume. Zoom, 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 zoom. Down, 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 down. There we go. So what I'm going to be looking for is 4 times the average of the previous 4 weeks, 4 or 5 weeks, like this one here. This green candle. It's not a breakout candle because the breakout has to happen above a horizontal line. It has to happen above the 30-week moving average. That leaves the close of the candle. And right now, you'd probably have a first breakout above the 450 level. So a candle close above 450 level with volume like this. This candle is over 1 million. These ones are under 500K, even less. So that type of a pattern you want. 4 small candles and 1 double the size. So if you happen to have that on top here, that'd be a breakout on the weekly candled Stan Weinstein trading framework. But remember, I set my alert at the 463, right, for that bigger pattern. That's the monthly candles resistance. Gotta be patient, guys. Ooh, you want a candle here. Because the price action might do some ups and downs right here. Don't want to get caught. Make sure that's like the stronger resistance, that a monthly candle close above the 460 level, a little bit higher, 463. That's going to give you the win, the confirmation. You sleep at night, have a monthly candle close. Look, it could always come back, but you're increasing your chances. You're increasing the probabilities of not getting whipsawed out. And after that, you have the breakout, and usually stands breakouts within 1 to 3 months. Oh, price action goes back down. Expect that, especially on breakouts, on stage 4 breakdowns. Sometimes it doesn't come back up because of the fear, just plummets. And expect a pullback. So don't go looking every day at the stock. Oh, I'm up, because expected that it's gonna go back down. So you got in a position here. You had the candles. You had the RSI or the Mansfield going above 50, halfway point. You have the volume 4 times the average of the previous 4 to 5 weeks. You have the candle above 30-week moving average, above the resistance line. And then the Ichimoku cloud is just the icing on top. So it's a recommendation from Isa Trader from stageanalysis.net. Helps identify support, resistance, just to make sure above. And I've noticed really the times that I would have played a Stan Weinstein stage 2 breakout, and there was a resistance above and I had to go through it, that the price action it played around with it, and the stage 2 breakout fizzled. Just wait. It could go through that resistance if it's there, and wait for a candle break above it. There's nothing wrong there. Stan always says 40 to 50% move of the stock before even the breakout. So you want that momentum. You want price action. So, okay, it's going up, it's going up, it's going up. And then you're with the trend. Just trying to pick the bottom and saying, oh, look, it went up. Well, if you pick a bottom, that means the trend was actually going downwards. And if you really want to catch that, that means you're playing against the trend. It's like there's no bragging rights in doing that. That's just like crazy, right? So wait till the stock gains, and then after that, Stan Weinstein system framework is built on breakouts and maximizing your time in a trade. So expect the pullback. If you expect it, you won't fear it. And if the pullback happens on low volume, on contracting volume, let's say it goes down here, and then the price action goes back down, buy right here. So if you approach the breakout level, your breakout line at 460, 465 on contracting volume, it's a perfect time to add. So right now you would have had one position here, and then you would have had another one, and then after that, that's how you enter the trade with Stan system. The worst thing you could do is see the pullback and forget that there's a volume could help you to know if it's healthy or not, and then you just panic and you raise your sell stop, and then you say, I want to get out. I don't want to lose on this trade. Then you get triggered out, only to have the stock action shoot back upwards. So the biggest clue is the volume. And if the volume is contracting, you're safe. If the volume is on high, it's increasing red candles, then you might have a case to raise your sell stop and get out. But most of the time, it's not going to be on strong volume because you already had the triple confirmation that it's going to go out. So expect it, get ready to add, and don't fear it. Don't stand on. You have a plan now, so there's no reason to fear. So if there's no fear, no reason to panic. And that's another technique for emotion management. Always have a plan, always. And if you don't, you get sideswiped. Take a step back, look at your trading framework. Okay, why did that happen? Devise a plan for that in action and incorporate it into your trading framework. And you got to eliminate every emotional action you could take. You need a plan. Remember the saying, if you fail to plan, you're planning to fail. All right, guys, that's about it for me. CNE, I have my alerts, 460, 465. Get triggered. Get me back in there. See ya.